Because if your insurance premium ends up being 2 to 3 times more than you expected, well, that's eating up a lot of profit. Hey guys, Sean Blomquist, Pine Financial Group, where we work together so you succeed. I've got everybody's favorite attorney, Jared Seidenberg, here with me today. And we've both been in this industry quite a while. And we've seen a lot of stuff. And one of the things that we want to talk about today is something that I feel gets overlooked a lot of the times, especially when people are running their numbers. And it's something that we've actually seen a shift in the way it's being handled more often is the insurance on the property when these people are getting these deals done.
Yeah, we sure have. I mean, I can't believe how often we're talking about this.
Yep.
And like I said, you've been doing this a long time.
Yep.
Do you ever think we'd be talking about insurance like this instead of getting in and out of deals and how much money people were going to make? We're just talking about property insurance.
Yeah,
right?
I mean, insurance used to be just one of those things where it was, you just, okay, get it done, on to the next thing, right?
It was one of the easiest things we did in underwriting. At Pine, when we underwrite deals, and let's be clear, we're talking about property insurance, not your general liability, not your builder's risk. We're talking about just real property insurance. And this used to be super easy, as you said.
Yep.
We had an agent that we worked with, or the borrower had an agent that they worked with. We told them what our loan amount was, and we got coverage on a vacancy policy right up to that loan amount, right?
No questions asked.
Now, it seems like this is one of the things that is slowing down our ability to get to the closing table. So we have been noticing, and this is a nationwide problem, but particularly in areas with natural hazards, floods, fires, things of this nature, insurance is being more and more difficult to get, right? And what we find is that we can't get the coverage that we want to protect our borrowers and to protect ourselves and our investors in the deal.
Yep.
And I think that this is something, and as a loan officer, we just have to start talking to our borrowers about.
Yeah.
So when you're going to look at a new deal, instead of just talking about the end result, are you having these conversations more often than not?
Yeah, I'm bringing it up, and especially when we're teaching classes and things like that too. I am letting these people know that, listen, insurance is kind of one of those things that goes by the wayside. You're not really even accounting for it in your numbers when you're running the numbers on the deal. You have to run it with your numbers because, one, the premiums are significantly higher than we've seen before. It may be in an area where you may not even be able to get insurance on it, right? So you want to make sure that, one, you're accounting for that. You're talking to an agent saying, hey, I'm looking at buying this property. What is the insurance going to be like on this? Because if your insurance premium ends up being 2 to 3 times more than you expected, well, that's eating up a lot of profit.
That sure is. And there are times when you just can't get it, right? So what we're telling people all the time right now is you have to look at this at the beginning. And what you want to do is you want to get an agent that understands our business. We don't need the owner-occupied insurance because you're not going to live in the place. If you were, you wouldn't be talking to Pine Financial Group to begin with. You need a vacancy policy that covers you while no one is living there. And then the biggest piece that we're finding is that this distinction between actual cash value and the replacement cost is becoming a sticking point. And what do we mean by that, right? So if you get an actual cash value policy, they're depreciating your asset, which means that if you have a $100,000 asset and it's 30 years old, they're going to depreciate that over 30 years, and you may get $40,000, $50,000, $60,000 on a payout, which obviously is going to leave you short. So we don't allow it, right? We want replacement cost, and we don't want functional value replacement cost, especially on an old property, right? You want the real replacement cost, and that's the delta that we're having to find a solution for, and it's not easy.
It's becoming more and more difficult. Yeah, I mean, you want to make sure that you're fully covered. So if something goes sideways with this property, it's a flood or a fire or whatever else, you've got the ability to either pay back the loan or completely develop the property like it was going to be when it was finished.
That's exactly right. And here, I'm going to make a plug for our processing team, and Sean's going to love this one too. What you want to do is you want to get out ahead of this. So if you've got a loan that you're going to do that's going to need this type of insurance, reach out, talk to Sean. He'll help you through it. We have some agents that we can talk to. You can use your own as long as they understand this business. But bottom line, guys, don't get 2 days before closing and find out that insurance is going to be a problem. So reach out to Pine Financial Group. Call Sean. How can they get you, Sean?
You can just go right to our website, pinefinancialgroup.com. Or all the phone numbers are right on there. I mean, reach out to one of us. One of us in the office is happy to walk you through this because we want to make sure you're covered. We want to make sure our money's protected. We just want to make sure everybody's safe in these things so that you can make money, do more deals.
That's exactly right, because what do? We work together to help you succeed.
That's right.
And this is one of the ways we're going to help get you there.
Exactly.